This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
Casey Boland joining me from Hanghold Capital Management, and we go back to the financial crisis, Casey. And as we know, there's a tendency on the part of human beings to often not learn the lessons. If we go back, go back and look at that crisis, what lessons should have been learned?
Well, well-known investor Jeremy Grantham replied when he was asked, what are people going to learn from this financial crisis that'll stick with them? And he said, in the short term, a lot, in the medium term, a little, in the long term, nothing at all. And that's historical precedent. And as they say, let's not let a crisis go to waste here, but there have been some enduring lessons that you can take away from the financial markets of these big drops.
All right, he says one of the things that you should learn is the herd, as he says, it always piles in at the wrong time. Is that sort of like by the time I hear about it, it's too late?
Yeah, and I had this happen recently. I was talking to somebody in their 40s recently, and he shared his experience with the financial markets. He got into some mutual funds in the late 1990s. When that ended badly, he took out all his savings and eventually tried flipping houses during the mid-2000s.
Ooh.
And once that all fell apart, he vowed to never invest again. It's unfortunate, but I'm sure he's not alone. And, again, having the herd going in at the wrong time in the wrong different areas, this is oftentimes what happens.
Yeah, no doubt. I get your financial advice from a reputable source is another.
It is, and you have to understand that 99% of the stuff that you read or listen to doesn't have your interests or your personal circumstances in mind. And many people, they took the wrong advice from the wrong source for the past cycle, and it didn't work out well for them. But you have to look at the different types of securities that are out there. There's no such thing as a bad investment, only a bad price. No security sector, asset class, or market's always bulletproof. Safety is an illusion that's often counterintuitive, and we saw this with bank stocks. Back in 2007, they felt safe because they had high dividends, but risky in 2009, but they had already fallen 70, 90%.
Yeah.
Any investment can become attractive at the right price or unattractive at the wrong price.
All right, then the idea that pessimism is easier to buy into than optimism. If you're buying in, you tend to go in optimistic. You might walk away pessimistic, but I would think you would buy optimistic. What am I missing?
Well, I think a lot of people are optimistic, but because of how many times things have happened in the markets, they feel burnt, they feel betrayed. And when you look at the headlines, oftentimes you see that fear sells, and that's what really people want to buy into because they are scared. And when you look at that, there's always these bold calls out there for the dollar collapsing, hyperinflation,
right,
gold going to $5,000 an ounce. And those oftentimes are what seem to attract investors. They seem to be attracted more to fear. And following these types of bold predictions, they rarely work out